Hey, Bulls and Bears, how's everybody doing? I hope you are well. Putting this out here on Saturday evening. So I'm going to take it a little bit slow. It's the weekend. Let's relax. Let's have a little fun. Hopefully, I mean, how much fun can you have with financial and economic news, right? A little bit. And people often say I don't have good news or that I'm negative. A comment that I heard the other day was that, why do I worry so much? Well, I don't think I worry a lot about I don't think I worry a lot in general. I think I worry about our kids' futures, right? I'll be fine. Um, just the young people in this country, I really think they're just being born into a really, really bad situation. And not even people that are just being born right now, not newborns, but even people in their teens, early 20s, early 30s are, most of them having a very, very difficult time. And, you just don't see people crying on the corner, on the streets, everywhere you go. I'm sure a lot of people don't want people to know uh, how much debt they're in and what kind of situations they're in financially. But let's start off with some good news. Let's get into this right here. IKEA. This is good news. So if you say if you say I can't talk today. I didn't get much sleep last night. If you say I don't have good news, you're wrong. Check this out. IKEA plans worldwide price cuts after warning time to buckle up. The world's largest furniture retailer plans to cut the prices of sofas, beds, appliances, much, much more across all locations. All locations. We came into 2023 with higher prices than we wanted. So they were preparing for these for inflationary forces, probably supply chain issues. But what do we see now? We've lowered our prices at the end of 2023 into 2024. Supply costs started to come down for us. That was the CEO, John Abramson. Also, I think a lot of the demand is being pulled away right now from IKEA because why? The student loan repayments. Students are a huge, huge, I think, portion of IKEA's customer base, right? Because it's cheaper furniture. I don't want to call it cheap, like it's not quality. I mean, it's not the best quality. Typically, if you get something from IKEA, it'll hang out at your house for a few years before it goes to the landfill. Maybe more than a few years if you're not rough on it. Anyways, nothing against IKEA. It's you get what you pay for. I mean, it's pretty low price stuff, right? So you have the younger people there, students decking out their dorm rooms, getting this lower cost furniture. Not just young people though. I got a dresser from there the other day because it's a dresser for our kids' room, and I'm not going to get something really nice for the kids' room. So I shop at IKEA. Anyways, interesting though that they're doing price cuts, and the part of the headline here, time to buckle up. Here's what they're saying about the time to buckle up. Quote, these are times to buckle up. It's not going to be an easy ride in the next few years. What I see this year is due to interest rates being where they are, and our consumers are challenged. He said our consumers are challenged. So we have been taking down our prices. Every market is interesting. I'm sorry. Every market is investing in lower prices. Wow. So that's something there, unquote. We see rising prices everywhere. This is an unusual situation here, but it gets to a point where high cost of living, high interest rates, the highest debt that we've ever seen, people are under the highest debt. It gets to a point where that at some point has to be deflationary. It has to be deflationary, right? So inflation ultimately ends up in deflation. If you look at history, now is it guaranteed to happen that way this time? I don't think it's guaranteed, but I think there's a good chance. Why is it not guaranteed? Well, before prices start to drop, before asset prices come down, what if we see emergency rate cuts because some global emergency? Just think 2020 2.0. What if they were to do that? What if they were to lower rates down to rock bottom near zero once again? What would happen to asset prices? I think you would see the markets shoot up. You'd see different investments shoot up. Crypto, you would see, of course, the bubbles, I think, get bigger. So let's hope that doesn't happen. But see, the reason I don't think it's going to happen, well, if there's an emergency, I think it's likely to happen. Let's say another global event. And but outside of that, it's very unlikely to happen because people are learning why the cost of living is so high, right? Of course, they're going to blame it on supply chains and other disruptions and other things, but the bottom line is there's too much money that had been pumped in the economy, both printing and just borrowed money from people taking out loans at rock bottom interest rates and bidding up asset prices, right? So pretty interesting. So what do you think about that? Is it interesting timing though, with the student loan payments had just restarted this month here in October. Now we see talks of price cuts out of Ikea. So maybe we'll see more of that, and maybe we'll start seeing some economic, sanity finally come back around here. Big bank loan volumes continue to decline as deposit outflows return. So remember the bank runs that we had where people were scrambling and pulling their money out of the bank? Well, deposits started increasing slightly, but this last month they started decreasing again. I'm looking at a chart right here. This is out of Bloomberg. Also on top of that, though, loan volume really drying up because the high interest rates. A lot of buyers are priced out of the market, and even people that aren't priced out of the market, a lot of them are just stepping away and saying, hey, let's sit back and wait and see what happens. Rates haven't been high that long, maybe a year now, when they really started increasing the rates, and it was so slow and incremental that the repercussions of these higher rates could also be slow on the way down. So it may not be an elevator down, it may be an escalator down, so to speak. But let's not stop right there. It gets more interesting here. This is out of the Times here. Ex-Walmart CEO says U.S. consumers reaching breaking point. So we have buckle up from the Ikea CEO. We have breaking point from the ex-Walmart CEO. Goes on here. The almighty American consumer continues. And it goes like this. The almighty American consumer whose spending drives the economy. I think all of you know that. We pound that point home here as often as possible. Whose spending drives the economy, you and me, consumers, taking on loans, swiping credit cards. We're the economy, basically, most of it. Spending drives the economy, is reaching a breaking point and is on the verge of folding. Wow, that's pretty serious. On the reaching a breaking point, on the verge of folding. What does that mean when the consumer folds? Does it mean bankruptcy? What does it mean? Well, let's read more into it here. He told CNBC in a recent interview that a series of factors, political polarization, inflation, high interest rates, were all working together to undermine consumers and their propensity to spend. Quote, that sort of pileup wears on the consumer and makes them wary. For the first time in a long time, there's a reason for the consumer to pause. Wow. So we're hearing this now from more retailers, from more CEOs, and we knew it had to happen. I think a lot of people were just surprised at how long it took to get here. It almost seemed like we had unlimited credit card limits, and the limits on these credit cards was never ending, right? But we haven't really seen huge tightening yet. Yes, volumes are down. A lot of that is because not many homes are for sale when you look at real estate. But also there has to be a breaking point. I mean, now with the student loan payments, we said the third quarter of this year is going to be pretty interesting. I think when you look at everything rolled in together, at some point, inflation has to turn to deflation, right? And some people say, well, no, they're devaluing the dollar so much that there's never going to be deflation. Well, I would argue against that because the dollar is still strong right now compared to other currencies. We're just under 107. I just looked it up here today. And this is compared to a basket of other currencies around the world, right? Some of the biggest countries. And also, listen to this. The US dollar outperforms all 11 BRICS currencies and gold. US dollar outperforms all 11 BRICS currencies and gold. Wow. So that's pretty interesting. So I always said here, don't completely abandon cash. You want to be diversified. Yes, the dollar is under attack, but this is a very, very slow moving thing. Remember, the dollar has been king for decades and decades. It's not going to go away overnight. In fact, it's getting stronger with the rate hikes, and that was the Fed's intention. Of course, they really haven't made the cost of living come down. Prices are still high. The cost of living high. Asset bubbles have not popped for the most part, but they're protecting the dollar, and now the dollar is strong here. The U.S. dollar has outperformed all 11 BRICS currencies in the last 3 months in the Forex markets. BRICS is looking to dethrone the U.S. dollar as the world's reserve currency by putting their local currencies forward for trade. Despite initiating multiple efforts to take on the U.S. dollar, BRICS currencies are ending at a low against the U.S. dollar. And the US dollar not only outperforms BRICS currencies, but also surpasses gold, oil, and other commodities in international markets. Wow. So think about this. What if we do see some of these bubbles pop, the real estate bubble, the car price bubble, the cost of living bubble? Let's talk about that. Then the dollar is going to be even stronger. You're going to have so many people looking to sell off their assets before prices come down more to get cash, to get ready for the descent to the bottom. That way, the people that do have cash can buy things up on the cheap. Again, is that guaranteed to happen? No, but the likelihood is very good because again, there's only so much the consumer can take. The consumer doesn't have a printing press like some entities have a printing press. The consumers, unless you're doing something illegal, remember it's illegal for you to print money. It's legal for them to print money. Is it fair? I think we can all agree on that. What do you think down in comments, folks? All right. So what do you think about that strong dollar? Ikea talking about price cuts because the consumer needs a break. Ex-Walmart CEO, the consumers basically looking pretty weak and in need of assistance. So what does this mean? You let me know. Are we at a turning point here in mid-October? Everybody, please let me know down in comments. We're going to wrap it up here. Thanks, everybody, for watching. Keep stacking. And until next time, thanks, everybody. Bye now.